And welcome to Bloomberg Live from Hong Kong. I'm Catherine Yang. Coming up on this hour of the show, the U.S. housing market is showing signs of recovery, even after figures showing prices slumped last quarter. But does this mean the worst is over? I'll ask the president of Sanders Financial Management. Plus, Gloucester Coal's profits. Mixed data out of the U.S. housing market. As we've been reporting, confidence among U.S. home builders showed a surprise gain this month, but home prices fell in half of U.S. cities in the fourth quarter. Fed Chair Ben Bernanke this week cited ongoing adjustments in housing as a near-term growth concern. Here with more is Emily Sanders, President and CEO of Sanders Financial Management, joining us from New York City. Good to see you, Emily. What do you make of the housing reports? What do they tell you? Is the worst over or not?
Good morning. No, the housing still has some weakness left in it, and probably the bottom won't be hit until sometime in 2008.
Sometime in 2008. So what needs to happen between now and 2008 for that to come up?
Well, the inventory of unsold houses is growing, so that needs to be worked down. And actually, builders in the United States are slowing down the new housing starts so that until the inventory of the unsold houses, gets worked down, and that will be a healthier sign that the bottom is close.
So I guess that means that housing starts out on Friday isn't likely to be promising, because our polls now show that starts are at 1.6 million, taking the January figure down almost 30% from a year earlier.
Yes, well, they've been coming down pretty steadily, and except for a few warm months where housing starts were surprisingly higher due to the ability to build in warm weather, it appears as if the housing starts will continue to drop. Again, working down the inventory of unsold homes.
Now, what assumptions have you got on the Fed funds rate this year, and what kind of an impact would that have on home buyers?
Well, actually, the Fed will probably raise rates one more time this year. Ben Bernanke hinted at it in his testimony yesterday and today, and the view that a rate cut will happen is certainly diminishing, and actually the Fed's number one concern is inflation. Dr. Bernanke said that time and time again, and because inflation is not at the target of 2%, it's actually been slightly trending above that for the last 3 years. The Fed has said that they would be willing to raise rates to get inflation within the target, and we predict that will happen probably sometime in the third or fourth quarter. 25 basis point increase.
So what is that going to mean for home buyers? Are they going to shift buying toward cheaper homes because of this?
Most likely. Some of that trend has already started, where home buyers, because of rising interest rates, and actually the rise in the Fed funds rate 17 times over the last few years has not made mortgage rates increase quite as much as one would have thought, but still rates have come up. So home buyers are slowly shifting toward lower-priced homes.
Now, in contrast, we're seeing a liquidity-driven boom that's driving up the global real estate market. Where are the best markets? I know that you've been to India recently.
Yes, I have, and that is one booming real estate market. And the global liquidity boom is just unbelievable. It's coming from all sources and in all countries, and some unexpected places like Romania, Bulgaria, or Ireland have seen just huge housing price increases. So while the U.S. is actually moderating, other parts of the world, India, London, we all know about, are just having double-digit run-ups in prices. There's a lot of migration to cities in places like India from rural people, and there's just not enough supply of housing for everybody that's coming, so it's pushing up the prices. And there are speculators. The ones that used to buy condos in Miami or Las Vegas are now buying them in Dubai or New Delhi or places like that. And some are moving in, and others are just planning to flip them.
Oh, let me pick up on the Indian market. Does it appear to you at this point that the boom there is broadening out beyond the information technology industry?
Yes, it is. The information technology industry in India still comprises 1/3 of India's export revenue, but there are other areas that are really coming on. strong. Of course, we all know about the acquisition of Core Steel by Tata Steel about a week or 10 days ago. That was very big news. And, you're starting to see industrial conglomerates kind of spreading their wings and moving beyond the borders, or actually building more infrastructure within India. So there is, a move from an agrarian society to an industrialized society. Probably India is where the United States was in the 1950s, post-World War II, but they are moving so fast. There's a lot of very aggressive entrepreneurs there who are making things happen, and India is really making itself felt on the world stage.
Emily, 30 seconds. What is the best way of participating in this global real estate market? Are you recommending clients to get into U.S. REITs with exposure overseas or international real estate exchange-traded funds?
Yes. The best way to get in due to liquidity is through exchange-traded funds in global real estate. And there's one, the symbol is RWX, that's traded on the New York Stock Exchange. It's a SPDR's Dow Jones Wilshire International Index.
Okay.
And there are also some U.S. REITs that invest globally, like Prologis.
All right. Well, thank you so much for joining us, Emily. Sanders Financial Management's Emily Sanders in New York.